Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Tuesday morning pre-market webcast. Starting to get a webcast out yesterday. We were having some technical problems, and then the open happened, and then we were kind of off to the races. But just had to settle for the old pivot report yesterday. But I am back, and everything is up and running today. All right, let's talk about where we are now. Let's talk about where we've been, and at the end, I want to give you some views on what I really think this market's going to be, not only this year, but into the foreseeable future. We are stuck in this range. I've drawn it out as 2150 to 2170. On the upside, it's a little iffier. It's, you can call it 70, 72. Just understand that every move up into anything that starts with a 70 or kind of close lately has pretty much failed. And each one of those moves has created a move back into the 2150s. We did as low as, I want to say, 53 yesterday. Didn't quite make it to 50. That 50 area is still open. They moved it up to 69.75 in the overnight, and now we're back trading 64, and we have been trading as low as 62.25. So we're in this 20 handle range. I think the next leg in the market is going to have everything to do with who can break through this 20 handle range. If the bulls can get above, if they can convert the 2170s to support, then you go after last week's high, in the 80-81 area, and all that's left after that is the all-time high in the 91-92 area. If the next time the bears get back down to the 50s, and that could be today. 50 holding, every time it holds, it creates a floor that the bulls can build upon. So what the bears need to do is convert 50. They need to convert 50 more than the bulls need to convert 70. If they convert 50, then you start to wonder if we're going to go the entire week without testing the weekly pivot that's down at the 21-23 area, or at a minimum going down and seeing this collection of moving averages that run from about 31 to 39. That opens up fairly quickly. So for now, we're in a range. It's an excellent trading environment. It's a really nice trading environment. We've been taking full advantage of it in the room, and I plan on taking full advantage of it every day. It's one of those things where we're seeing this shift with respect to the election and how things are going to be going forward, and it's going to keep volatility in this market, in my opinion. I think you're going to see an excellent trading tape for the foreseeable future. I see no reason why, with a president that is this controversial, why you aren't going to see really good tapes to trade, in and through 2017, in and through to the midterm. Why not? He's going to do things that are controversial. He's going to do things that are going to upset world markets. And for traders, that creates volatility. Things move. So I don't expect it to be violent. It's going to have bad days just like anything else has bad days. But I like the fact that it's going to be leaning towards volatility. Let's look at the hourly. After the election, here's your limit down. Well, here's your reaction high. Here's your limit down. Here's the V back. Here's your 80 half high. Since that, and I could draw this 50 line out here. So I did. I drew a 50 line. The magic of editing, right? So you take this 50 and you take this area up here at 72. And you watch the opportunity, upper end of the range, lower end of the range, back and forth. And if it wants to keep doing this all week, I'm going to be a very happy camper. But like I said, you watch to see if you get the break. If you get the break below, then you've got monthly pivot, weekly pivot down here. Okay, 23.31. Don't forget you've also got the mid band, which is basically linked up with the monthly pivot right now. And there's some other exponential moving averages in there as well. You get up over here, you get up over the 72, you've got to test 80 half. And then you've got to test the all-time high. The last thing I'll leave you with, I mentioned this last week. I'm not sure if I mentioned it on here. I know I mentioned it in the room. It is highly unusual. It is highly unusual to leave candles like this that you make in the middle of the night when no one's looking at big areas. It's very unusual that you leave these alone. As we head in to December, as we head towards January, February, I fully expect a test of this candle. If you look back at the other big sell-offs that we've had in the last, year to 2 years, the vast majority of them sold off, were retested, created matching lows, double bottoms, confirmed the support and however they did it, and then headed higher. Support in this area needs to be confirmed, plain and simple. May not happen anytime soon, but this just hanging out here is going to be unusual until it gets resolved. Now, does it have to? No. Do we really care if it doesn't? No, because we're here to trade what we see, right? Talk about in the room, trade what you see. No ideologies. Don't dig your heels in. Don't get stubborn. Just trade what you see. This is the perfect environment to just trade what you see. All right. Everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Check out the website. Come check out the chat room. If you've never checked us out, if you've checked us out before, this is the ideal environment, and I think it's going to last for a very long time. And my strong suggestion is you come on in, meet everybody, see if we speak to what you do, and let's trade this stuff together. All right, take care, everybody. I'll be back tomorrow morning with another webcast. Trade them well.